When Warren Buffett makes a move, the financial world pays attention. His decisions don't just ripple through Wall Street. They often make waves that reach investors and analysts around the globe. Buffett's reputation as a master of value investing means that every purchase, every sale, and every public comment is scrutinized for deeper meaning. He's not just a wealthy investor. He's the legendary chairman and CEO of Berkshire Hathaway, known for turning smart, patient investments into massive wealth. Over decades, Buffett has built a track record that few can rival, transforming Berkshire from a struggling textile company into a global powerhouse. His disciplined approach and long-term vision have made him a role model for investors everywhere. When Berkshire buys a big stake in a company, it's more than news, it's a market signal. Investors and traders alike look for clues in Buffett's moves, often interpreting them as endorsements of a company's future prospects. His investments can boost a company's stock price overnight and spark conversations across the financial industry. Buffett's endorsement says, "I've studied this business, and I believe in its future." He's famous for his deep research, poring over annual reports and financial statements before making a move. When he finally acts, it's after careful consideration and conviction. His value investing philosophy means he buys strong companies when others are fearful. Buffett often steps in when markets are volatile, seeing opportunity where others see only risk. This contrarian mindset has helped him find bargains and build wealth, even during economic downturns. That's why Berkshire's recent $1.5 billion investment in UnitedHealth Group matters. It's not just a financial transaction, it's a statement of confidence in the company's resilience and long-term potential, especially at a time when the healthcare sector faces uncertainty. Despite negative headlines, Buffett sees a resilient business ready for a comeback. He looks beyond short-term noise, focusing on fundamentals and the ability of a company to weather storms and emerge stronger. His actions teach us the best opportunities often appear when fear dominates the market. Buffett's courage to invest when others hesitate is a lesson in patience and conviction, reminding us that market downturns can be the best time to buy. UnitedHealth's battered stock attracted Buffett's attention for a reason. He saw value where others saw only risk, recognizing the company's strong fundamentals and potential for recovery. When the Oracle of Omaha bets big, it's a lesson for every investor, no matter your portfolio size. By studying his moves, we can learn to spot value, stay calm in turbulent times, and make smarter decisions for our own financial futures. Let's see why. UnitedHealth Group isn't just another insurance company. It's a healthcare titan, a true behemoth that towers over the American healthcare landscape. With its vast network and deep resources, UnitedHealth has become a name synonymous with both innovation and influence in the industry. UNH provides insurance to tens of millions of Americans, touching the lives of families, individuals, and businesses in every corner of the country. But its reach goes far beyond simply issuing insurance cards or processing claims. Its Optum division is a powerhouse in its own right, managing pharmacy benefits for countless patients, operating clinics that deliver direct care, and harnessing cutting-edge data analytics to improve outcomes across the entire medical industry. Optum's technology and expertise are woven into the fabric of modern healthcare. This seamless integration of insurance, care delivery, pharmacy management, and data makes UnitedHealth a one-stop shop for healthcare needs. It's a model that gives the company enormous scale, efficiency, and power, allowing it to shape the industry in ways few others can. Healthcare is a necessity, not a luxury. People need care in good times and bad, making this industry, and UnitedHealth in particular, remarkably resilient even during economic downturns or times of uncertainty. UnitedHealth's sheer size, trusted brand, and treasure trove of healthcare data create what investors call a wide moat, a fortress of competitive advantages that's incredibly difficult for rivals to breach. It's exactly the kind of essential, durable business Warren Buffett loves to invest in, one that can weather storms and keep growing steadily over decades. Think of UnitedHealth as a complete healthcare ecosystem, an insurer, a technology company, a pharmacy manager, and a care provider all rolled into one. This unique combination gives it unmatched influence and reach. Its importance to the U.S. medical system is hard to overstate. UnitedHealth touches nearly every aspect of healthcare, from the doctor's office to the pharmacy counter, and even behind the scenes in data and analytics. Even when facing challenges or setbacks, UnitedHealth remains a giant, its presence and influence undiminished. Understanding the true scale and scope of United Health is key to seeing why Buffett and other savvy investors see long-term value here. It's not just about size, it's about being essential. United Health isn't just big, it's indispensable to the functioning of American healthcare, a company that's become part of the nation's critical infrastructure. That's what makes it a classic Buffett target, a business that's built to last, with deep roots and a future that looks just as strong as its past. So why was United Health stock on sale? A cascade of bad news. Rising healthcare costs squeezed profits as patients returned for delayed care. The Department of Justice launched an antitrust investigation, raising fears of fines and forced changes. Then, a massive cyber attack crippled its Change Healthcare unit, disrupting billing nationwide and costing billions. The fallout damaged United Health's reputation and added operational chaos. Tragedy struck with the murder of a former executive, deepening the sense of crisis. Soaring costs, federal scrutiny, a cyber disaster, and shocking headlines, investors panicked. The result? A perfect storm that sent the stock tumbling. When fear takes over, logic disappears. United Health stock, once a Wall Street favorite, plunged as bad news piled up. By early 2025, shares had lost nearly half their value, down 46% in months. Investors sold in a panic, ignoring the company's fundamental strength. The price drop was driven by emotion, not rational analysis. Yes, the problems were real, but did they truly destroy half the company's value? This is classic market overreaction. At moments like this, pessimism peaks, and so does opportunity. The key question, is the business broken or just facing temporary setbacks? Buffett saw what many missed, a rare chance to buy a great company at a deep discount. That's the difference between panic selling and disciplined investing, and it set the stage for what happened next. Just as United Health's outlook seemed bleakest, everything changed. The mood on Wall Street was tense. Investors were glued to their screens, watching United Health stock tumble day after day. Analysts debated whether the company could recover, and fear was spreading fast. It felt like the bottom could fall out at any moment. Then, on August 15, 2025, a single SEC filing sent shockwaves through the financial world. Berkshire Hathaway, Warren Buffett's legendary investment firm, had quietly scooped up more than 5 million shares of United Health. The $1.5 billion bet was a bombshell. News outlets scrambled to break the story, and traders on the floor were visibly stunned. It was the kind of move that instantly commands attention. Instantly, the narrative flipped. Buffett's seal of approval sparked a buying frenzy. Suddenly, what had been a story of decline became a story of hope and opportunity. United Health stock soared over 12% in pre-market trading, adding billions in value within minutes. The market's mood shifted from panic to euphoria almost overnight. This is the Buffett effect. One move from the Oracle of Omaha can reverse months of fear and uncertainty. Investors trust his judgment, and his involvement alone can change the fate of a company. Investors who'd been too scared to buy suddenly rushed in, eager not to miss out on the rebound. Phones rang off the hook at brokerage firms as orders poured in. Short sellers scrambled to cover their positions, fueling the rally even further. The pressure was intense, and many were caught off guard by the speed of the turnaround. Buffett didn't need to explain. His actions spoke volumes. The market understood. If Buffett was buying, there was value others had missed. He saw a business with a wide moat, battered by temporary problems, trading at a bargain. Buffett's strategy has always been to look past the noise and focus on long-term fundamentals. His bet put a floor under the stock and signaled the panic was over. Relief swept through the market as confidence returned. In the market, perception can change in an instant. One bold move can turn fear into optimism and losses into gains. And Buffett's move changed everything, reminding everyone that sometimes all it takes is one titan's conviction to ignite a rally. Why did Buffett buy United Health at its lowest point? It's classic contrarian investing. Be fearful when others are greedy and greedy when others are fearful. He saw a dominant company facing fixable problems, rising costs, a DOJ probe, a cyber attack, but nothing that broke its long-term value. Buffett's team dug deep into the numbers, analyzed Optum's tech-driven growth, and saw a business trading far below its true worth. When a quality company sells for 50 cents on the dollar, Buffett acts. He's not chasing short-term gains. He's buying a piece of a great business for the long haul. Patience and discipline are his edge. This wasn't a gamble. It was a calculated move based on decades of experience. Buffett's genius is seeing value where others see only fear. That's what sets him apart. UnitedHealth's story echoes past market comebacks. Remember Meta, Facebook in 2022? Its stock crashed over 70% amid panic about growth and spending. But as Meta refocused and invested in AI, the business rebounded, and so did the stock. The pattern is clear. Great companies hit rough patches, the market overreacts, and disciplined investors seize the opportunity. UnitedHealth, like Meta, is a dominant leader facing temporary turmoil. Savvy investors look past the headlines to the company's core strengths. Analysts now call UnitedHealth the new Meta, predicting a powerful rebound as it recovers. History shows, panic creates bargains for those who keep their cool. Buffett's move is part of a proven playbook. This isn't just about billionaires, it's about lessons for your own money. First, price and value aren't the same. UnitedHealth's price crashed, but its core business value didn't vanish. Learn to separate short-term noise from long-term fundamentals. Second, courage pays. The best returns often come when you buy quality companies during market panic. But do your homework. Don't buy just because a stock is down. Third, patience is key. Buffett invests for years, not weeks. Hold through the ups and downs, let value grow over time. Finally, think for yourself. Use Buffett's moves as inspiration, but make your own decisions. Ask, do I understand this business? Does it fit my goals? The real lesson, be an investor, not a follower. That's how you build wealth. What's the bottom line for you? Great companies face tough times. Your job is to spot the difference between temporary trouble and permanent damage. The market's fear often creates your opportunity. Contrarian thinking is powerful. When everyone's scared, start your research. Focus on the long term. Buffett bets on trends that play out over years, not quarters. You don't need billions to invest like Buffett. Find wonderful businesses with strong advantages. Wait for rare moments of panic to buy at a discount. Have the courage to act and the patience to hold. The UnitedHealth saga is a real-time lesson in timeless investing wisdom. Learn it, apply it, and you'll be on your way to financial security.